Hello traders, it's Samurai Trader here. Welcome to session 92, my video recaps on how to day trade any market. In today's session I will be recapping the NQ, a number of trades. I think I took about 10 trades on this particular day, but please remember you can apply, or you do apply, the exact same setups to any market, whether it be futures, forex, stocks, or even crypto. Now, as I also say in every video, is $1,000 a day not enough, particularly for the young guns who want to generally earn a lot more? Of course you increase your position size, but we never ever break our money management rules, and so we never risk any more than 2% in any open positions at any one time. Money management, or the lack thereof, is probably one of the greatest killers besides greed of trading accounts. As we move on, better get the disclaimer over and done with, traders. You do know that there's a risk in trading. Don't trade with money that you can't afford to lose. And the great thing is you can trade on the simulator. Virtually every trading platform has one now. You can trade on the simulator before you actually start trading live. If you haven't already, you can actually download my free day trading ebook, The Truth About Day Trading. You can see the description link below, and just a very quick 30-odd second advertisement. Well, first of all, make sure you do subscribe to my channel, okay, so that way you can be kept up to date with all of my videos, and make sure you give me a big like too, please. But are you a new or experienced trader? I do have the most comprehensive training program out there. As my members call it, they describe it as a gold mine. In the general members area, okay, maybe it could be a little better organized, but there's dozens of folders there with different files in there. There's indicators, there's over 18 different setups, there's 35 PowerPoints, there's over 200 hours. Gee, it must be about 300 hours of video instruction. Now there's a gold mine of information there, and you can get that for only $197. And on top of that, you can also get, as a bonus, 1 month in my live coaching room. I run both a live trading room 3 mornings a week, and also run a coaching room, which is 2 evenings a week, 6 p.m. to 8 p.m. Tuesdays and Wednesdays Eastern Standard Time, where you get to check in. We discuss everything from money management through to indicators, and we spend a good hour every session on the right hand side of a chart where I'm teaching members exactly what I'm looking for when I trade. And after that, you can subscribe if you wish. After your bonus month, you can subscribe, drop me an email and say, hey, this is great, I want to continue, and it's $97 a month. And actually, if you go to my website, that's about to go up to $297 a month. Why? Because it works. Okay, it's anyway, I won't go any more on that, but come and join me. Okay, so everything you see today you get included in my program. Now let's get into this. If you've watched my videos a number of times, I'm going to spend 5 minutes going through the basics again. Why? Because it's important. First of all, in today's session I actually had 3, if I remember correctly, a week in. I recorded this last week, and a week in my life, day trading is a long time ago, and meaning that I traded a number of setups. Now I'm going to explain a lot of these setups to you, but as a new trader, you want to really focus on trading with the trend only, and I'll point those out as we go to the charts. You want to avoid counter trend trading, reversions of the mean trading. Some trades you want to avoid because it takes more skill set in your early days. And so how you really make it as a day trader is, not too hard, not too easy, just right. And after I've been day trading now for 28 years and training for over 20 years, I can tell you now, traders, that you want to focus on trading with the trend only. Now this is important, and I know you see this regularly, because a poor man or woman is not a man or woman without a cent, but it's one without a dream. Now also, we've got to be very careful, because greed kills day traders. It truly does. And you've probably heard me use the quote, get rich slowly. Very few people get rich quickly in this business. Yes, I know there's some crypto billionaires, but overall, if you want to stay in this business, you've got to be conservative. You can still have some lofty goals. For an example, targeting between 100 and 500 a day, 500 if you're trading during the New York hours, is extremely realistic. But I'm going to show you an email, and I'll talk about this when we get to a slide here, just talking to you about targeting $100 a day initially. Now, if you don't have the account size required, for an example, in today's session I'm going to be trading you'll see me trading the 4-tick Renko on the NQ. Now what that means is, at a 2% risk, you need an account size of $4,000. That is, at times I might have a 16-tick stop loss, which is $80 per contract. I trade typically 5 lots, but I will add to a position if I have a golden setup, but never any more than 10. That's my risk profile. Now, with that being said, what's a realistic target for that? Well, I go for $200 a day per contract on average. Now that's during the Globex session, and I'll explain that when we get to the charts over here, because you'll be able to see the time stamps there. Now as you gain experience, you can easily increase to 300 a day, particularly if you lead then into the New York session, 500, 600, 700 a day. However, as a new trader, if you start out on a micro, because here you need 4,000 per contract, you start targeting $10 a day, then you go to 15, then you go to 20, and 25, 30 is a really good target. Now in a moment you'll see the effects of that on your account. The challenge is most traders won't approach it this way. They want to go like a bull at a gate. They get in there, they blow their account once or twice, it blows their confidence, and seriously, they suffer from psychological damage. That is, you tend to hesitate when you go to take a trade. There's only one way to master the art of day trading. It's the right way the first time. We'll talk more about this in a couple of minutes, because this $100 a day is really important. But let's have a look at the charts here to begin with. Now what I've done, I decided to record these sessions as I was trading, and I prefer just to focus. When I trade, I'm a scalper. Okay, now a scalper means we get in and out fairly quickly. By scalping, it also means we've got a fairly small stop loss. Okay, so we can get in, get out, and I'm usually wrapped up well and truly within an hour, maybe 2 at the very most. And so I don't have a massive goal, 1,000 a day. I'm in my 60s. I'm quite happy with that. It's a great living. Now working from home, all the benefits, no, it's just brilliant. However, the young guns, I know some of them say, why aren't you trading 100 lots? You know why? I don't want to have that. I don't want to get the blood pressure that goes with that. If you're a young gun, okay. But also where I live, I used to live in Santa Monica, by the way, but I'm now back in Australia, and I don't want to be working the New York hours. It's in the middle of the night for me. So trading for me is about lifestyle, as it should be for you. Now what I did on this day is I fired off some trading fairly early. Now what you can see down the bottom here, this is Central Standard Time. That's basically 8 p.m. 9:55. And so for those that are brand new traders or looking at trading for the first time, or maybe not quite familiar with this, the market closes for an hour and it opens back up at 5 p.m. Central Standard Time, 6 p.m. Eastern. Okay, and it's what we call the Globex session. That will go right through until the New York session opens. Now the market's a lot thinly traded. There's nowhere near as the amount of contracts, but what that also means is it's a lot slower most of the time. Now what it enables me to do is to trade what I call a 4-tick Renko chart. So if you're not familiar with Renko, and by the way, you can trade using tick charts, range, time-based charts with these setups. It doesn't really matter. Well, it does actually. Let me take that back, because I like to have smooth charts and either tick or Renko, but Renko is really by far my most favorite. Okay, it's just a lot easier to see the patterns in the setups. Now, what I was about to say here is if you're trading 5 to 10 contracts, no problems trading after hours, except one thing: we will get some slip at times and slippage. In fact, I had some down here I'll talk about in a moment. So when I went to get out of the trade, it went through my stop, that is where I wanted to cover the trade, and I basically had a small loss there. Okay, that's just one disadvantage. However, the advantages far outweigh the disadvantages, and some of the huge benefits are for you is that if you say still working, you can get home and then start trading. Now I'll go through these. So that's a trend following, and I'm going to explain some of these T12s, and you'll see I've got codes on these. Just makes it easy with members that and that's their pivot levels, etc. But all of these, nearly all of these, are based upon patterns that are mechanical and rules based. We think in patterns, traders, and so it just makes it so much easier when you've got pattern based trades. So you can see here I finished, wrapped up, well in this case I hit my target, but then not long after, a couple of hours, well I say not long after, I think it's an hour or two later, okay, I then saw this setup here, and on the way down, by the way, there were some beautiful setups here, and this here is the low of day, the current day's low, and this is the current day's high. So when midnight rolls over, okay, the software automatically, the indicators automatically reset the way I do it. Okay, and so then I had two trades here, and so for members watching this, I had a 3B, and what I really liked about this 3B, and I'll probably mention on the video, I think I recorded this as well, is I had some nice divergence, and it was in the direction of the overall higher time frame, but then I had what we call a T10 setup as well, so I added to the position. Okay, and down we went here. Now you'll hear me talk about front running. What does that mean? See down here I had the low of day. What I'll usually do is I'll usually get out usually before we hit the low or the high. Yes, we can see here we step down and we went through the low of the day, or same thing, the high of the day. But if I want to cover a trade, I'll usually get out a couple of ticks beforehand, and other traders had the same idea, because then there's quite a deep pullback. So when I'm selling or buying into pivots, so by the way, see those lines there, that's the current, that was that current day's open is the yellow, and yesterday's close, so basically at the same time period there, right there. All of these areas become support resistance levels. Now I then jumped in and I took one more trade, so I really stacked on. I basically better than doubled my overall daily target, what I'm normally after. I was feeling good, but then this is can I swear, this is a bit of a smart ass trade actually, and really I just shouldn't have taken it because I was getting cocky. And what that means is, traders, this happens to so many traders I know, professional traders I know, where some of your biggest losses can actually come after your biggest wins, because we get overconfident. It's very, very easy to trick yourself into you can do no wrong. Now what I actually had there, I took this trade, and I don't think I recorded this part here, is I had some great momentum there, and I jumped in with what I call a momentum trade for a quick scalp. But really, that was a high risk trade, selling at the low of the day. It was just, I know I had momentum, but it also could have bet me as well. And so I typed in thereafter as a quick scalp, high risk breakout, don't get too smart. And not long after, really a minute later, there was a great entry just there. For members watching this, there was a beautiful T3 reversal, which I didn't take. I'd already well and truly hit my target, and I was also thinking, that's a smart ass trade, excuse my language. So traders, what you want to be doing is trading in the direction of a trend. There's a ton of trades on most markets. Now before we get to the recording, and I know I bring this up every video, and the reason being, you show me a man or woman with a compelling future, and I'll show you a man or woman that's got a fantastic chance of achieving greatness when it comes to trading. Now, what goes with that, of course, is patience and discipline. Now, even if you've got 4, 10, 50, 100, $500,000, start by trading a micro account, going for just $20 a day. If you do that within 12 weeks, you've got 4,000. You can now roll over. You're using the market's money. This, from a psychological point of view, is massive. Now over here, how this compound table works, I know most of you are familiar with it. You only start trading a second contract every time you double your money. So what we've got here is a realistic plan of action using the market's money. Now traders, as you'll hear me say time and time again, time will pass anyway. Yes, this may have taken us 12 weeks, but on the other hand, we've developed a lot of confidence and competence and experience in that time. If you're an experienced trader that's struggling or have been blowing your account, this is what I'd be recommending also. But I know it's going to be hard for you to resist going to a large account. But this is where it's not until we develop self-trust do we really succeed as traders. You see, trading truly is 90% head stuff. It really is. You break the rules, the trading gods come and drain your account. Now once we got that $4,000, we can then roll over and start trading the big contract. 12 weeks later, I've now got 46,000 in my account. I do have to say potentially. It's based upon 200, and I'll show you how we do that in a moment. Okay, and I'm now earning my 10 grand a week, trading 10, 11 contracts, and my account is now $46,000. So I'm happy. Now the big question then is, how do we actually do that? How do we actually get there? Well, here on average we need to execute really between 4 and 5 trades a day. Yes, you can go for, and you'll see I'll go for some larger moves, which I'll explain when I show you the recording in a moment. But typically I'm scalping the market in and out. I want to get the cash register to ring. Okay, now when you scalp, it also means that usually we're using fixed targets, we're not trailing. Now it may be your personalities you like to trail. Okay, as scalpers, there's no real right or wrong unless you're going against your personality. But if you're a scalper, usually we're in and out, and providing you've got a good 75% win-loss ratio, you're going to do mighty fine. Now I call and you'll see then in a moment, we're after 4 net 6-step trades a day. But back onto this here, where you had that micro account, basically took you 12 weeks to build that account. Now a micro, and sorry, I apologize for this, I should have mentioned a micro account is 10% of the value. That is, a micro contract is 10% of a value. Now we've got micro contracts, I want to say brokers have them for the ES, for the Dow, the Russell. You've even got it on the Texas T, on oil, 10% of the value. So you can trade your favorite market, or what will become your favorite market, with only 10% of a requirement. Okay, now the commissions are higher, so it's harder to actually get your net profit, but just put that down as part of the cost of education. But here it's taken us 24 weeks. And as I say to everyone, where will you be in 24 weeks? Now what I will say, add 6 to 10 weeks to that. And the reason being, and I know some people are, by the way, jumping. They don't want to hear this stuff, right? They want to get in and try to get rich quickly. Okay, get rich slowly. But that 6 to 8 weeks on top of that is trading on the simulator. You don't go live until you're profitable on the simulator. Now one thing I did want to mention is this. I mentioned it briefly about going for $100 a day, and I talk to my members in both the coaching room and the live trading room about this all the time. Is starting on $10 a day, go to 15, go to 20, or if you're on the big contract, go for $100 a day. Stop your live trading, switch over to the simulator, celebrate your win. Okay, this works. Okay, because what you're doing is and you've probably heard the old saying, evidence defeats disbelief. Okay, you're building evidence that you can trust yourself, and yes, you can do it, because if you can make $100 once, traders, one day you can do it again and again and again. Now, what if you're stuck with that? What if you're conservative? Okay, what if you're a retiree and you want to be really conservative with your trading? What if you only went for $100 every day? As you're about to see, you can have a magnificent lifestyle on that. Once again, the same rules apply. You go for only $100 a day per contract. Within week 24, my account's now 46,000. I'm earning my 5,000 a week here. Otherwise, 16 weeks, my 2,000 a week. For most retirees, I'd be very happy with that. On the other hand, you keep building there. By week 30, okay, your account size is now 95,000 and you're on your 10 grand a week. Now, I will say this, and on all honesty, I've got to say this, that's trading around 20 contracts, okay, at a time. So that would probably be about the maximum during the Globex session. You'll find when you get into the London session, early morning New York, okay, but you'd expect a bit more slippage, but it's still very, very doable. Okay, just means sometimes you're not going to have all your contracts filled, and I'm just saying that this for the benefit of the experienced traders here. Now you can see here you can get extremely wealthy having a sensible target. So let's have a quick view for the next 10 minutes of the recordings. I've got 2 recordings here because I recorded one lot, then saw some other trades. I thought, beauty, I'm going to take these as well. Now, first of all, whenever I trade, and I do this in the live trading room and the coaching room, here's what we've got to be checking regularly. Where are our floor pivots? Where are the prior day's open, high, low and close levels? Where are the major EMAs, being the 89 and the 200, especially on your anchor charts? Where that is your high time frames? Where's the intraday swing highs and lows? And where's the current open, high and low? Now, I just mentioned using a anchor chart. I actually use 2. I want you to look at it this way, that your anchor chart is the tide going in, and your entry chart is the waves. So we're looking for pullbacks, retracements, and for that wave to then head back in the direction of the overall tide. Okay, I want to imagine you're in a floaty or a I'm not sure what you call them. Most of my clients here in the US, but in a pumped up tire, a tube going down the river. You want to really overall, until you gain experience, go with the flow of the river. So let me pull this up, and it's not perfect, but it should still give you really what I want to get across. So this was actually quite a challenging trade here I took. So this is a flat 200 and a flat 89 EMA. Up here, this is my anchor chart 1, a major EMA from anchor chart 1. Note up here how I get a pivot bounce. That's the R1, resistance 1. Now the great thing about nearly all of these levels, they plot automatically on the charts. Okay, now this is the prior day's close and the open. Notice how we bounce off a pivot. We bounce off the open, high, low and close. See, we bounce off these areas all the time. Now sometimes we punch through, okay, but quite often you'll get this, and there's a certain way that we trade them. So let me hit start here. So what I had was an entry right here. Now straight in front of me, okay, what have I got up here? I've got a major EMA which becomes a price magnet, and I've got a pivot. Now as we then head up in a moment, whoops, I've got a comment there. What do I say here? All right, I had a higher low here, but it was also a higher risk. Oh, and here I'm going to type in that's at the time. Why? Because we were flat. Okay, we were fairly flat. I want to remember that flat 200 EMAs are evil. Okay, they really can be. Now my stop loss typically will go one tick below a swing or one tick above, except in a runaway market. Usually I'll use a buy stop order or a limit order, and so on my matrix this is automatically coded that when I place an order that will go in, but you'll quite often see I will adjust these orders. For an example, up here, will I be able to get through the major EMA up here and hit the pivot? I want you to also notice I'm front running the pivot. I'm before the pivot. Now up here, and that's not me, this is just the video moving around as I was adjusting things, but as I get closer, if I remember correctly on this one, and I'll just move this along a bit quicker, that I hit the major EMA and then it looked like I was going to have a reversal. So I'll just let this run for a minute and see there I touched my target, but I was not filled. Now when that happens, again, you'll find that happens quite often, particularly during the Globex session, where you hit your target and you don't get filled. I will then quite often get to lock in my profits just in case I get a rebound or a reversal, and there's a good reason for that here. Look at my major EMA trending down here. Now we may punch through, and here I got out of that particular trade, but and here I've now shorted this. And for members watching this, you may know what this is. This is what we call a T12. So a T12 is where I have a major EMA on a higher time frame. Naturally I'm simplifying it at the moment. There's a couple of rules to it, but usually a pretty good trade. Now when I take any trade, what I'm also looking at, what's in front of me. For an example, see this here. If we had a trade, there would have been a trade. I wasn't on it, but there's a trade here. This is what we call blue skies ahead. Okay, see here in shorting here, look what I've got down below. I've got some major EMAs. I've got yesterday's low in the open here. So the question is, will I get through this major EMAs? And that's quite often the question, because what can happen is, see how we've made a new higher high there. Will we get a new higher low and head back south north again? We'll see in a moment. What am I going to put through? I can't remember now. This is last week. Okay, so will we get through? I'm probably going to mean there the major EMAs there, because quite often you will bounce off those. Okay, so I'll pop down there fairly quickly. Here, are we going to keep going? Now, what actually happens here is I will automatically go to break even. See these, we call these steps. I call them steps. See how I went to break even plus, that's actually can't tell, but that's 3 ticks. I automatically on my trading matrix or DOM, it automatically goes to break even when I hit 5 steps, but I'll manage that manually if I've got a major area of support or resistance closer, or I will pop an order back up above if I feel I might get a bit of a wriggle, but it's a very high probability chance of going ahead. In other words, see how my stop loss is right there now. So I've gone to break even plus locked in some profit. So break even means my entry price. Now here, what am I going to do here? I can't remember what happens here, but I've moved my stop down. I'm still looking at this low down here for exiting my trade, and here it is here. Now it pops down. Thank you very much. Will it get through? Yes, it is, and usually we'll get a bounce. Now what have I got? I've now got a new lower low in place. Now when we've got a new lower low, I'm looking for a new lower high for another trade. Now I'm not in that one. Where did I jump in? I'm not sure where I jumped in there, but any of that will move fairly quickly. But right there I've got a trade entry. Members watching that, that's our T20-1, by the way. But just note at the moment we've got some support here. Will we break and come on down? Now what we can't see here, if I remember correctly, we had some pivots down below. So when we've got pivots, here we go, larger ticket or larger target. Okay, larger target. When I've got a major area of support or resistance, I will go for a larger target. Okay, so rather than say going for here, typically I'm going for $70 per contract, 350 per trade. I'm usually after, I'll go for maybe 100. It just depends. Now what am I doing here? I know what I'm going to do. What I'm also looking at, so this is NinjaTrader, and you've got them for basically every platform. See these levels here, these are prior swing points. Remember I mentioned about we want to know where are our major support resistance areas, and the reason being, quite often we'll come down and we'll bounce off those. So this here was a swing from way over here. This here is a swing from way over here. They make excellent targets. Okay, we'll come down and we'll bounce on those time and time again. Now I went to break even just there automatically, and see how then I moved my stop back up. Okay, back up to just the one tick above that entry candle. And the reason being, traders, is that we usually stair step our way down. So by stair stepping, this is when I was videoing that smoothing there, by stair stepping it means we'll quite often come down, pull up, and then head back down again. So if you're at break even too early, quite often that means you'll get stopped at. It'll come stop you at only to see it continue. That'll still happen anyway, because at times there's a reason we are. Look at that there, see that there? Here are the pivots. So this is why I'm targeting, but I have to get through these swings just here first, and you'll be amazed at how much support resistance they give you. Now just to move along, okay, so as we're coming down here, okay, so here, and I've actually shorted again, so I've added to my position just here. The reason being, I've got price magnets, and that's what we call them, price magnets down here, very strong magnets here. So I've covered some of my trades here, and my next target is down here. Now this is where I'll talk to you about front running. Now front running is pretty much what I mentioned actually over here. If I'm targeting a pivot or a major area of support, I'll usually get out a few ticks beforehand. Okay, because quite often other traders like myself will want to take profits there, and we'll get out. The way scalpers look at it, we can always get back in again. And I think this is a trade there where actually I had some slip out of this one here, so I got stopped out of this one. I went to break even, and I actually lost 1 or 2 ticks on that particular move. Now moving along here, what else then did I have? I then had another entry. What do I have here? This is a quick scalp to go long. That's right, so this is a scalp to go long. What's the direction of the trend now? We can see here that the 89 and the 200 is now in a downtrend. I'm usually expecting a bounce in this region. What have I got? A downtrending 89, I've got a downtrending 200. This is a zone we've got to be very cautious of. Okay, and let's see what happened. I think I front run this, got out up there it is there. So I actually tagged it, then exited that particular trade. Now so it was still a great return in 20 minutes, I think that was. Now video 2, I'll just show you this one here just very quickly. So that was back on the other side there, those trades there. I then came down, I then saw this. Now when I've got very deep pullbacks, I had the support of both the anchor chart 1 and the entry chart and my highest time frame. We're all in downtrends. Okay, so I've got a nice deep pullback. I had divergence, and this is what I call a 3B, very high probability trade. I also just there, traders, was front running. Okay, see that low just there? So I entered this trade, I pulled back, and I then had a T10. Now T10 is a great reversal, or is a really great confirmation of a reversal. So I jumped in on the T10, added to the position, and you can see here my exit is above the low of day. Whoops. And that sometimes happens when I type in, if for some reason it jumps back. Right, so here I'm going for the low of day to front run. Now if I think I'm going to get a reversal, I'll actually bring my, and here my stop would have already been, I would have gone the break even already. I've pulled it back up again, but this is a high probability. And here it is here. See what I'm doing here? I'm referring to my anchor chart. Let me go back here. I want to show you something here. See this here, major resistance up above. See this down. We love to test things twice. Okay, so as we come down, this is, and I can't remember where I got out here or whether it continued, but when we've got this, we come down, deep pullback, big move, deep pullback. We love to go back down there and retest the low, and that's probably what I was just checking. Okay, just checking on my anchor charts just there, and just to move this quickly because the time is getting on. Okay, okay, so here I must have been taking a wee bit of time. Do I go to break even? I think that's what I'm, whoops, break even. Do I go to break even here? I sort of, do I not, excuse the spelling here. So here I'm sort of oscillating. Do I not go to break even? And I don't think I'll ever come up with the right answer. Sometimes you go to break even, you get stopped out, it continues. Other times you don't. Anyway, most of my rules are very mechanical. Okay, which is important by the, because then if you get stopped out, if you follow the rules, you don't beat yourself up. What am I saying here? This is a very high probability trade to go back down and retest the low. Plus, if I miss the low, that's okay because I'm front running. Okay, and here we go. So just there, I moved my stop right down just then. Okay, so I moved my stop right down, so if it did bounce, I'd be okay. Now what actually, and then look what happened. Other traders had the same idea. Okay, then it rebounded back, and if I remember correctly, it was quite a deep pullback. So traders, you know, initially this may seem, if you're a brand new trader, complex, but it's actually quite straightforward. You know, I call it follow the gold. Okay, so up here, see the gold EMA, that's your go-to. We want to trade in the direction of the gold. Now I've covered a lot in this 37-minute session. Traders, you can learn this, providing you approach this with one. This is a business. You've got to approach it like a business. Proper money management, you've got to have the right training, you've got to learn the setups, and the great thing is nearly everything I trade is based upon a pattern. And so that's what you're really looking for, traders. You're looking for patterns in the market. So traders, come and join me. $197 plus you can come and join my live sessions. If you can't make the live sessions, if you're in the UK, I've got clients in Germany, France. Of course, it's those hours are not too good for you. You can watch your recording. You can actually during the sessions you can type in any questions, or you can email them in and I answer them in the session as well. So traders, thank you very much. I hope you enjoyed that. Give my video a big like, and I'll hopefully see you in the coaching room. Thank you, traders. See you in the next video.